Hello guys and welcome back to another video. Today I'm going to be going through a couple of more trades that I did during March. March 2024 for me was a bit of a trial month. I've changed a lot of things and implemented some ICT concept. The reason for this was just for more regular trades really, and I noticed a lot of trades where we were sort of not retracing into order blocks only, so unmitigated areas were causing reactions, and I wanted to further develop my understanding on these unmitigated areas to try and get involved in more trades and not miss potential opportunities. So I'm going to run through 2 trades today. In total with my funded account and my personal account, we amassed over $3,000 this month. Now, there is a lot more to it, and because I was trying to learn it pretty quick and I was picking it up relatively quickly, I was backtesting some of it and I was jumping in a bit early, I suppose. But it allowed me to learn from the losses very quickly. So I'm going to run through the first loss of the month here, which is on Euro US dollar. And we're starting with the daily time frame. Okay, so as you can see, we're in a bearish trend and we're just tapping into premium regions in a fair value gap left behind on the daily time frame. So this is telling me to look for potential short opportunities in the market. So from here I'll drop down to the 4 hour. Now 4 hour tells a bit of a different story. We're currently in a bullish phase. As I mentioned in the last video, a new swing structure for me forms once we see a push to the upside or to the downside, but in this instance for bullish breaker structure, we see a push to the upside and a retracement of at least 2 candles before then seeing the next push. So arguably you could call this one another swing breaker structure, but because it's so small and didn't really amount to much, it's more of a corrective nature, so I'm just leaving this from this low to this high as the swing region. So if we just go back to the daily quickly, I'm just going to make this visible on the hourly time frames. Now it might make it look a bit messier, but it's just to illustrate that this slight push up here, we saw interact with this daily zone and then slowly push back off. Then later in the day we reacted from this 4 hour order block, which was a demand zone. And then we dropped to the hourly, and the hourly has now flipped bearish since interacting with this daily supply. So obviously there's 2 sort of contradictory biases here, which does happen quite often in trading. To me, high time frame analysis does take precedent more so, and obviously we have to bear in mind that daily is bearish overall. So you can see here we flipped bearish and we interacted with a hourly order block, and also there's a fair value gap here also, like so. So we've got a couple of reasons to go short from here, right? So we now drop to the 15-minute time frame. We can see a couple of other things, right? We've had a 15-minute breaker structure to the downside, and I've denoted the range using the fib tool, and you can see here price is very corrective and we're still in between this hourly order block and a 4 hour demand order block, and as well previous daily range. So the red line indicates yesterday's daily high, which was on the 12th of March, and the 12th of March is daily low, and you can see we're kind of in between there as well. So I'm just going to play price forward a bit on the 15-minute time frame. Okay, so we can see now we've interacted with the hour 1 order block. We still haven't broke structure to the upside yet. Okay, so we're still bearish on the 15-minute and the hourly. We've already interacted with the daily region also, as showed previously. So now I'm anticipating that we might find an opportunity to short from here. So I will drop to the 2-minute time frame, and what I do here is I wait for a bearish break of structure. So the 2 candle pullback minimum rule applies here, and you can see we had 3 and then a push up. So that is a bullish swing break of structure here, so we can mark that. And what I want to see is a break of this low, or for price to push up further and then break this previous low here. Okay, so price pushed up again. We had at least 2 candle pullback here, and you can see we look to be just breaking that low, and we have done so now. So here is the bearish 2-minute breaker structure that I wanted to see, and what I do then is I wait for a opposite candle to print, which we can see has formed there. So that kind of tells me that price is going to now retrace the upside in anticipation to drive lower. So if we mark up a fib tool from the high to the low, and I want to see an entry point in and around the 0.5 region or higher. And as you can see, there's a fair value gap here, so we set that as the entry zone, entry on the open, and stop loss 1 pip above, and we target 2R on our trades, and we let this play out and see if we get tagged in. So we do get tagged in, and unfortunately we end up hitting stop loss. So something to note here was that this trade peaked at 1.55R, right? So there's something that I'm testing to see if you can go break even from 1.5R. However, when I was mapping this out, a similar opportunity arose on GBP USD as well. The GBP USD opportunity went on to hit the 2% profit region. So this told me that potentially the pound dollar was the better pair to trade. I am used to trading that pair as well. I used to trade EU, but not on smaller time frames, on 15 minute and above. So this is where I made the decision to switch to the pound dollar going forward, and therefore we would have avoided this loss in the future because I'm no longer trading EU. You know, in hindsight, I wouldn't have placed this trade, and if I'd have known to stick to GU and given myself more time to backtest GU, then I would have just stuck to that pair, which obviously now I have, and I've tested EU, and GU does come along better for me and for this trading style. But with it being a trial month and something new, and the first official trade, I only risked something very low. I think it was 0.3%, and so the loss was just shy of £220. So now what I'll do is I'll break down a separate GBP USD trade. It was my first winner, and it came after doing a fair bit more back testing. Okay guys, so here's the GU trade. This was executed on the 14th of March, and you can see the daily price is recently broke bullish and then an immediate push to the downside. You can see we do have this fair value gap here, but we are not within applicable premium discount, so it is probably quite weak. So if we drop to the 4 hour now, you can see to the 4 hour price action is bullish. We did have a 2 candle retracement here, but it was only a small retracement really. I mean, you could class that as a swing break, but just wasn't really for me. You know, as long as you use internal structure as well, then, you know, it doesn't matter how mechanical you are with your swing mapping. Okay, so you can see we have a fair value gap here on the 4 hour, which we have seen a mitigation in the 0.5 region. And obviously this marries up with our daily fair value gap too, if I just change the visibility on that. Okay, so now you can see this larger area is the daily fair value gap. So there is a few confluences here to potentially go long. However, I do like to try and flow with the markets and whatever they're showing me. So if we drop to the hourly time frame, we can see a bit of a different story. So we have a bearish breaker structure to the downside. Obviously this is the hour 4 fair value gap from before on the daily, and you can see prices reacted from here and pushed up into an hourly order block. So we've got a bit of another sandwich sort of action going on. So if I play price forward, notice as well that I've set this time zone now to New York time. That's because I operate with the New York kill zones. Okay, so if I fast forward price a little bit, you can see we've interacted with the hour 1 order block. Now on the 15 minute time frame, we can see that price is bullish, right? Okay, and we have swept previous day highs whilst also being in the hourly order block. So for me, I'm happy to look for shorts from here as long as I see an opportunity come about on the 2 minute time frame once New York session is open, which is 7 a.m. New York time. So we drop to the 2 minute. You can see here that price is bearish at the moment, and we've had 2 breaker structures to the downside, so this indicates to me that price wants to continue to the downside. But for extra confirmation, once we've seen the New York kill zone open, I want to see a fresh 2 minute breaker structure. So as we can see, we broke structure again to the downside at 7:30 New York time, and obviously because the clocks hadn't changed yet, this was 11:30 in the morning UK time. So then I wait for a candle retracement, which we get here. Then I mark the premium discount tool up from the high to the low, and then look for a fair value gap. Now because this is quite a tight swing range, the fair value gap on this trade was quite small. Entry point was so slim here. As you can see, this fair value gap was printed between these two bullish candles and this large bearish candle. Now, I do usually want to see it in the 0.5 region or above, but in this situation, we only have this one fair value gap. So when there's only one fair value gap in the swing leg, I can use this for entry because there is no other option. Okay, so I put the entry on the open and stop loss 1 pip above. This was actually 1.1 pips above this time or thereabouts, and then the take profit was 2R. So let's play price forward. So we're tagged in at about 25 to 8 New York time or 25 to 12 UK time, and not even an hour later, about 45 minutes later, we hit take profit for 2%. So this was a breakdown of another trade taken this month. So I'll share profit screens now for the losses taken for the previous trade and the amount we won for this winning trade. Now, as you can see from me breaking down these trades, price is often sandwiched between two biases, and the high time frame may say one thing and the lower time frame may be doing another. If we know we're in a retracement phase on the high time frames without applicable premium discount, I'm happy to follow the flow on the lower time frames until we reach an area of significance on the higher time frames. And as long as we are coming off a low time frame pro trend bias and there's no high time frame demand zones or supply zones in the way that may contradict how I want to enter the markets, then I'm happy to look to execute. And as you can see here, if we just go over this quickly again, you can see that we have these high time frame zones here, but they weren't in the applicable premium discount, so there was always potential for price to go lower. Okay, and then by the time we entered, we had already mitigated this area previously, and the fresh mitigation was actually in line with the hourly and other lower time frames pro direction. So I was happy to take shorts from here because that was the most recent interaction. This meant, with other confluences such as sweep of the previous daily high, this meant that I was happy to take a counter trade, and obviously it paid off. So I hope this video made sense and that you learned something and took something from it. If there's any questions, I'm always here. My comment section is open, and as always, I will leave a link in the description with my free Telegram group. April will be interesting because I find April is typically a bit of a slower month. That, combined with the fact that this is quite new to me still, means it will be an interesting month. I've currently got about 19 people in the current community, and it's going to be free for everyone at least till the end of this month. I'll probably do May for free as well if it's a bit of a slow month. And of course, if you enjoy the video, then please do leave it a like, and I'm hoping to upload once a week. If there's any suggestions or anything you want to see, again, leave it in the comment section. I will read it, and I'll try my hardest to create a video to suit the topic you wish to see next. And as always, thanks for watching.